Hi guys, welcome back to the channel, Subsistence Traveling. I'm your host Jay. Today we're talking about 10 mortgage REITs to buy now. All right, so I'm going to give you a chance to look at the disclaimer. All right, so I encourage that we stay connected. I want you to follow me on Twitter, Subsistence TRA1, support Patreon at Subsistence Traveling, donate via PayPal. I'll have links to everything below. So I have an announcement to make. My new course is coming out. It's called How to Evaluate Stocks. It's a beginner's course. It'll be available via Udemy and Patreon. Okay, if you're interested, let me know in the comment section. Okay. All right, so the case for mortgage REITs. All right, so we have valuations, very low valuations. A lot of these are trading. Well, mostly all of these are either trading at book value or below. Okay, so the valuations are very good. Low dollar prices. Okay, and you know I'm a big fan of low dollar price investing. So deindustrialization. See, I think a lot of people think we're entering into a highly technological world, and that is very far from the truth. We'll be using more technology in some ways, but in other ways, we're entering into the most basic subsistence based kind of economy. Real estate is going to be very important. You know, those who own real estate is going to, that's going to be one of the only ways to generate wealth. So you're going to have a rush of people, trying to buy housing, because they know at least I can rent this out, or, people always need, housing. So that's something to look at. Risk reward balance. The yields are very good. A lot of companies have cut their dividends, but for the most part, you could find some decent yields in this space. So as always, the criteria for selecting these stocks, we look at profitability, valuation, liquidity and solvency, dividends, fundamentals of the sector/industry. All right, so the first one is BROADMARK Realty Capital, ticker symbol BRMK, priced at $8.95. Price to earnings of 15.06. Price to book of 1. Pays a dividend of 8.06%. Okay, and this REIT focused mainly on residential real estate mortgages. However, I have to say, this is one of the most solvent mortgage REITs there is. You have to understand that this is a sector or industry where they use a lot of leverage. Okay. However, they have an excellent balance sheet, so obviously I had to put this one first. Next is Blackstone Mortgage Trust, ticker symbol BXMT, priced at $21.71. Price to earnings of 16.08. Price to book of 0.8, and it pays a dividend of 11.42%. Okay, the valuation is very good. This REIT focused mainly on commercial mortgages. This is probably one of the best REITs out there, mortgage REITs out there. Very well run. Like I said, they focus mainly on commercial real estate, and the rules regarding commercial real estate mortgages are a little different. Um, even though a lot of people are, say, oh, commercial real estate is a bad thing, the rules, regarding commercial real estate mortgages are a little different than with the residential real estate mortgages. And that can be a good thing, especially for the company who owns the mortgages. I'm not going to go into the specifics, but you know, I think um, I think both I think both commercial real estate and residential real estate will do good in this environment, but commercial real estate will do very good. Next is Annaly Capital Management, ticker symbol NLY, priced at $6.64, price to earnings of 9.66, price to book of 0.89, pays a dividend of 13.25%. Okay, and the valuation is decent. Well, I mean, it's less than book value, so it's a good valuation. Dividend is good. They focus mainly on residential mortgages, and they also, invest in residential mortgage-backed securities. So, definitely worth looking into. Next is Starwood Property Trust, ticker symbol STWD, priced at $13.79, price to earnings of 14.25, price to book of 0.88, pays a dividend of 13.92%. Okay, and valuation is good, dividend is good. This company focuses mainly on commercial real estate. Okay, and this is a well-run mortgage REIT. Like I said, it's a good company to look at. I used to own this before the lockdown. I sold all my shares during the in March. I'm looking to buy some more. So, all right, we have New York Mortgage Trust, ticker symbol NYMT, price at $2.43, price to book of 0.61, pays a dividend of 8.23%. Okay, excellent valuation. This one focuses mainly on residential mortgages. When you see the PE, we have no information for the PE. That's because they had negative earnings. They've lost money. Especially most of these mortgage REITs made lots of money before this crisis. However, we all know that during the crisis there were moratoriums and on evictions and forbearances and all this and so forth, and so obviously a lot of these mortgage REITs lost money, but I still think they're good investments. Next is AGNC Investment REIT, ticker symbol AGNC, price at $12.71, price book of 0.87, pays a dividend of 11.33%. Okay, again, good valuations. They invest in not only mortgages, mostly residential mortgages, but also mortgage-backed securities and also agency, meaning mortgages that's backed by the government. And there can be drawbacks to that. I mean, usually when people before this crisis took place, people would say, okay, they own something that's backed by the government, that should be a good thing. But when you look at what's going on now, it may not it's not a good thing to, especially when you're a mortgage company, and you hold a lot of stuff that's backed by the government. That's a negative thing, because the government could say, okay, look, you have to allow the customers to do this and all the, so definitely a situation that, so we have Two Harbors Investment, ticker symbol TWO, priced at $4.91, price to book of 0.71, pays a dividend of 11.41%. All right, we have Ladder Capital, ticker symbol LADR, priced at $7.17, price to earnings of 8.4, price to book of 0.65, pays a dividend of 11.16%. Okay, and they're a little bit more diversified. They invest in both commercial and residential mortgages, mostly on the residential side, but they also dabble with commercial mortgages, hotels and office space. They're very diversified, so that's something worth looking into. Last but not least is Chimera Investment, ticker symbol CIM, priced at $8.95, price to earnings of 2.80, price to book of 0.72, pays a dividend of 13.41%. Okay. And the valuation is good. Like as most of these stocks have very good valuation, very good dividend. This one, I'm trying to just verify here and see what they. Okay, so yeah, they focus mainly on residential mortgages, residential mortgage-backed securities. Okay, so they focus mainly on residential. Okay, and they're a well-run company as well. All right, so let's look at the other companies. We have Apollo Commercial Real Estate Finance, ticker symbol ARI, Arbor Realty Trust, ticker symbol ABR, New Residential, ticker symbol NRZ, Granite Point Mortgage Trust, ticker symbol GPMT. And so here's my final thought. If you're looking for solvency, this may not be the sector. Most of the companies in here is highly leveraged. This is part of the financial industry, so they move off of leverage. Okay, so that's something you have to look into. You just have to understand how their assets and their liabilities are calculated and so forth. Negative interest rates pose a threat. This industry is a very good industry to invest in. Like, I know, people look at it and like, okay, no, this is a dangerous place to invest in, but this is an excellent place to invest in. The biggest threat to this industry will be negative interest rates. If interest rates were to turn negative, that would be a huge problem with this industry. And I don't believe you're going to see negative interest rates in the US. I don't believe that. But I'm not saying it's impossible, but I just don't see it happening. Strong demand for housing. We've already seen that home builders are on fire. It's a strong demand for housing, especially after this lockdown. So, mortgages, especially in the US. The US is not a cash market. So if there's a strong demand for housing in the US, there's going to be a strong demand for mortgages as well. And this time, I don't believe you're not gonna have a situation like 2008 again. I don't believe that. I think this time people are gonna do whatever they need to do to make sure they pay their mortgages and hold on to their homes. I don't think people are you're gonna see the wave of foreclosures and so forth that we experienced in 2008. So deindustrialization. As I spoke about this earlier, I'm saying that we're entering into a subsistence-based economy. This is going to be a simple economy. I know we're being told that, all this technology and so forth, but we're entering into a simple economy where basically people who own property, like back in hundreds of years ago, where the main source of wealth was property, we're entering into a similar period where most wealth is probably going to be in real estate. And so, especially when people see what's happening in this economy, your best decision may just be to buy a house or an apartment and try to rent it out. People will always need housing, or bed and breakfast or something. People always need housing. And so, I think this will drive the demand for real estate, henceforth driving the demand for mortgages. All right, so I encourage you guys to stay tuned. Be on the lookout for the course. It's a fantastic course. It's coming very soon. Matter of fact, it's coming in a few days, so be on the lookout for that. Encourage you to like and share the videos. Subscribe to the channel. Follow me on Twitter. Support me on Patreon. And donate via PayPal. I have links to everything below. As I always say,